Financial independence in today's world requires thinking outside of the financial system itself. And the only monies that exist outside of the system itself are gold and silver, because they're the only two monetary assets that are not simultaneously someone else's responsibility. In other words, there's no trust needed. No one could default on it or not make good on the loan or be a counterpart. You have it and own it.
Hey, it's Rocky. Welcome to Richer Soul. My guest today is David Morgan, who challenges what most people think money is and why that misunderstanding may cost you more than you realize. Imagine it's 12 months from now, and you've achieved your major life goals. How does it feel to be in the best shape of your life? To wake up energized, excited about the day? To have great relationships and friends who support you and propel you forward? How does it feel to have an excess of money, to be able to make the choices you want? To be fearless and open to trying new adventures? Imagine being connected to the universe and it providing everything you desire. It's possible over time, and your past does not dictate your future. The only thing holding you back from this vision is you. It's time to take control of our thoughts and use them to our advantage. Welcome to Richer Soul, where we achieve our dreams and bring balance to health, wealth, relationships, time, and spirituality. If you have not had a chance to listen to episodes 1 through 9, I encourage you to go back and listen to the framework behind Richer Soul and how to create the life of your dreams. You can also find all the show notes for this episode at richersoul.com. What if the thing you call financial freedom is only working as long as the system around it does? A lot of successful people have done what they were told. Work hard, save well, build assets, stay disciplined. But this conversation asks a deeper question. What if the money itself is no longer storing value the way you think it is? Inflation, anyone? In our episode today, David Morgan and I talk about inflation, debt, digital control, and why gold and silver may matter to him far beyond investing. But we also go somewhere more human than that. We talk about what success really means when the external scorecard starts to feel less convincing. Let's meet David and see what he has to say. Welcome to Richer Soul, David Morgan. It's great to have you join us today.
Well, thanks for having me, Rocky.
And I'm excited to learn from you. We always like to start at the beginning. What was it like when you were growing up, and how much did your family and school teach you about money?
Well, that's a very interesting question, and I've said this on other podcasts, but, we've got new viewers, and I don't mind repeating. But I grew up in San Diego County as a kid. My grade school years, first grade to sixth grade. My dad had planted an orchard of mostly citrus trees, some almond trees. I forget how many there were, probably 20, 25 trees. And it was my job every weekend to water those trees. And he had these huge dams around each one. It took, 20 minutes for, one tree, and then you move the hose to the next one. Anyway, I'm getting to the point. I was paid 25 cents a week to do that. And I, being in the country and kind of a natural saver, just started stacking quarters. Well, I'd stacked up probably $10 worth, so however many weeks that is. And then one day my dad gave me another quarter, and it wasn't a silver quarter. It was what I call the Johnson Slug. It was a 1965 quarter. So here I am, 11 years old, getting silver, not even thinking about it. My dad puts this different one in my hand, and I immediately thought to myself, wait a minute, this thing cannot be worth all these other ones that I've saved, I've earned. What is going on? And really, I didn't know, but none of the adults around me ever said anything about it. So, wealth is not numbers. I mean, real wealth comes from something, that's another story, but it comes out of the ground, basically on the ground, from the ground, basically from resources. So here we were kind of getting cheated, but I didn't know it. So that started me on a quest to figure out, what is money and does silver make a difference? And I didn't dive in as a 12-year-old kid and start studying monetary history, but that question was kind of nagging me. And I did pursue that course of action later in life, and much early, really. I mean, I was self-taught about banking, fractional reserve banking, how the bankers basically get something for nothing, how loans come into existence when you sign the dotted line, and all those things that most people don't even think about or even know about today. So that's what started it all. The day that my dad threw a Johnson slug in my hands and I had the wherewithal to think about
It's not the normal thought of a 12-year-old.
it. No.
But
No.
before that, all the quarters weren't made of full silver, were they? I know there were silver
90%
dollars.
silver. They were 90% silver and 10% copper from 1964 and earlier. So from 1965 on, they're not silver. But from 1964 and any date you want to name, 1880, 1812, 1922, any of those quarters, dimes, or halves are 90% silver.
Interesting. I didn't realize the quarter shifted that much. I remember as a kid, there were actual bills that talked about gold and silver on them too. And they've kind of disappeared over the years as well, as is the value of most money. So you had this interest in money. Did that immediately kind of take you to where you went to learn more in college and studying, or did you go off in another direction?
I was self-taught. But yeah, basically the foundation was I had to ask myself, what is money or what is real money? Is there a difference? And what I discovered was money must be a store of value. It's also a medium of exchange and a unit of account, which all fiat systems, the system we're currently on worldwide, is a fiat system. So it's great for a medium of exchange and unit of account, but it doesn't store value, which is the true definition of money. Fiat currencies fail historically. It's an if, not a when question. And gold and silver are not investments first. They are insurance and savings outside of the system. You don't hold it, you don't own it, as many of us say. But this isn't about speculation. It's about financial self-responsibility. The reason the system fails and feels broken, and it is broken, is a debt-based system requires constant expansion. It's mathematically unstable. As the old adage goes, Rocky, no tree grows to the moon. In other words, there's a limit to how much a tree will grow or how much an economy can expand or, that type of thing. So the financial system is not exempt from those laws of nature. So global debt levels now exceed what can realistically be repaid no matter how much growth we get. And the currency displacement is the silent tax most people don't understand. They might be making, quote unquote, more money, or it's a bigger number on a salary, but it's not buying the same goods and services that it did, a year, 2, 3, 4 years prior. And the reason for that's called debasement of the currency. So if you're not falling behind, your measuring stick is shrinking. In other words, they keep stealing more from you. It's a hidden tax, basically. That's what inflation does. So I can go on from there, but that's what got me keyed into okay, is there a difference? And that's when I started looking at monetary history and found out the United States is founded on a silver standard, not a gold standard. And then it changed in the crime of 1872. And this is when the Eastern establishment bankers changed us to a gold-only standard. And that's what the book by Frank Baum, The Wizard of Oz, is all about. The Wizard of Oz, OZ, stands for ounce, silver ounce. And Dorothy wore silver slippers on the yellow brick road. And so there was a big debate in those days over the monetary question of whether we should have silver and gold working in the monetary system or just gold. And the bankers won, which really impoverished the working class, the farmers and miners, and people working in industry or in factories all suffered because silver was no longer accepted as a final means of payment.
Do you think it was done by design, or is it kind of an accidental thing that we fell into this monetary system, or was there actual thinking and something behind building it this way?
It can be argued both sides. I mean, I always try to be as objective as possible. With an engineering background, there's not much room for error. I mean, engineering is the only language I know of that, if we produce, a Chevrolet truck, we could produce it in South Africa, Canada, or Mozambique. It'll be exactly the same no matter where it's produced because the language of what metal to use and what thickness and what strength and what length and width and all that so precise that you get an exact product no matter what. Of course, our normal communications aren't that way. So our system is set up where a bimetallic standard or even a trimetallic standard, gold, silver, and copper, or gold and silver works the best. But there's been a flaw in that system. And the flaw is that they fixed the price between gold and silver. In other words, it's fixed at 15 units of silver equal 1 unit of gold. But that's not right. In a free market, the system has to allow for the marketplace to determine how many coppers equal silver, how many silvers equal gold, and vice versa. But once you have both metals or three metals working for your favor, it's real money. It's a store of value. Copper has value indefinitely, always will, always has, and always will. Silver and gold, the same thing. So back to your questions by design, I would favor a yes. But whether it was truly that way would be hard to argue. Absolutely. I think I could win a case in a debate. But the idea is once you go from a gold-only standard, it's very easy to go into a fiat system, which we now have worldwide. There's a great paper on the Gold Eagle website called Gold Standard Equals Fiat in Disguise. And the author of that article writes about the fact that once you have a monometallic standard, a one-only metal as your standard, the only thing you can measure it in is in how many pieces of paper represents that piece of metal. And now you can just keep printing away because the metal stays the same. Like people tell me, well, they made a lot of money in the gold market. Well, what they're saying is they made a lot of difference between when they bought it and when they sold it or if they were to sell it today. But the gold didn't change. Gold actually maintained its purchasing power. Maybe it increased some, but really the ounce is the same ounce no matter what. It's just what is it valued at that changes. And the problem is in these great inflations is that the paper currency becomes devalued so quickly that the metals shoot up really rapidly. And that's what we're starting to witness, which is an indication, not a guarantee, that we're getting closer to the end than the beginning.
So what happens at the end?
Well, at the end, there is no big, huge collapse. People say a financial collapse. I've used the word many times. And when you use the word collapse, people think about like a building collapsing, and that's, reasonable to think those ways. But in a financial collapse, none of the buildings collapse. All the farms stay there, all the schools, all the factories, all the automobile plants, all the roads, all the minerals, all the oil, all the water, all the foodstuffs. Nothing changes as far as physical wealth of the world. It's all there. But in a financial collapse, what changes is how it's priced and who owns it. So people that own, let's say, a lot of wheat farms on leverage that can't make their payments are indebted to, let's say, a corporation or a bank, cannot meet the obligation, they lose their property. And so someone else gets it. So in a financial collapse, there's a huge change not only of ownership, but in a revaluing everything. Everything gets revalued. Stocks get revalued. Gold gets revalued. Real estate, both commercial and residential, gets revalued. And again, the ownership changes. So basically, in a financial collapse, you really don't want to be in debt. Now, if you go into a true hyperinflation, it may be worth it to do so. I don't think we'll hit a true hyperinflation. I think we're going to be more of in a stagflation is what we are now, which means the middle class gets wiped out. And you have basically two main classes, the elite and everybody else. And that's the direction that we're headed. And the system's not moving into a communist type of system. It's moving into a technocracy where the AI will be the arbitrator of most laws and most adjudications will be based upon an algorithm. So you're getting ready for much of a brave new world. And the money system will probably be reset to tokens only. No money, no fiat, no pieces of paper. It'll be what China has already. And that's everything works off of your phone. And if your phone isn't charged, it still works off the palm of your hand. And you pay for everything by your identity, by you being the real you and the bank knowing who you are.
So let's kind of dig into this because there are a couple of different things I think converging at the same time. I think people are aware that when we came out of COVID, we had somewhat of what they call a K economy, which meant the top whatever percent, maybe about 10, have really done extremely well. The bottom 90 have not done well. And so that's why there's that squeeze and the concentration of wealth. I don't know how much of that is by the way people behave or just the way the system worked, kind of irrelevant. In the meantime, the government spent a lot of money during COVID across the world. And so now they have this massive debt. Inflation reared its head, and most people aren't familiar with inflation because we didn't have it since probably the early 80s, right? That was the last time when that was there. And so you've got that going on. And what you're talking about, things cost more. And during COVID, people did get raises, but now we're seeing no raises or cut in raises or lots of even high tech workers losing their job. In the meantime, AI has made the world of knowledge kind of almost irrelevant or fully accessible. If you need to learn something, you can. I mean, you can get it almost instantaneously. And yet our monetary system really hasn't changed, has it?
No, I mean, there's a part that we need to address, and you outlined it pretty well. I'll just fill it in a bit. But the financial independence in a distorted system is something you got to think about. Up to maybe 20 years ago, I thought, well, first of all, freedom and financial independence go hand in hand. If you were financially free, it meant you were free. I mean, you could not work, you could start a foundation, you could party, you could buy a yacht. I mean, there's lots of stuff to do if you're financially free. But in the new system, that basically is a beta test in China, doesn't matter how much money you have because it's a programmable currency, which is what they face and we're facing in the near future. It's not a function of how much money you have in the bank. It's a function of what your credit score is or your social credit score, how good a citizen you are, what your carbon credit is, how far you travel. Are you outside of your 15-minute city or not? So you have to look at the traditional path. Stocks, bonds, real estate are built on a stable currency assumption, but the currency isn't stable. This assumption is now breaking down for everybody to see. So the diversification is a must. You must have some physical metals. Don't sell all your real estate and buy gold. That's not what I'm saying. Select mining equities, top-tier blue chips are a good way for leverage into the sector. And real assets that are fully paid for, I think. So you can have real estate that cash flows, that's paid off. I think that's a good place to be. But you've got to be outside the mainstream stocks, bonds, and let's say leverage real estate. So key insight is financial independence in today's world requires thinking outside of the financial system itself. And the only monies that exist outside of the system itself are gold and silver because they're the only two monetary assets that are not simultaneously someone else's responsibility. In other words, there's no trust needed. No one could default on it or not make good on the loan or be a counterparty. You have it and own it. So the ownership of money, not fiat, is a position that very few people understand. But after the Great Reset, everyone will know that.
How does digital currency like a Bitcoin or something fit into that paradigm?
I'm not very pro Bitcoin. I did 30 podcasts about it on my website for free. Anyone interested, go to themorganreport.com, hit the blog tab, go over to the search engine. I've done like 2,000 interviews over the last 25 years, so you're not going to find it. With the search engine, type in crypto conspiracy. I named it that deliberately so the trolls wouldn't say, well, that's a conspiracy. I called it a conspiracy. And there's 30 podcasts on who's who in the zoo. How it started in MIT, how Jeffrey Epstein's involved, how Bill Gates is involved, how the stable coins came about, and how this thing was actually a setup for the bankers to take control over it, which they have. But your broader question is, how does crypto fit into it? First of all, I am pro-blockchain and not against crypto, but I'm not favorable to Bitcoin. I think there will be that. I think there will be not necessarily a central bank digital currency, because probably wouldn't pass Congress, but you could have a private entity like a JP Morgan come up with a digital currency, or you could have an Amazon, or there could be competing digital currencies. But that's definitely the way it's going. It'll be a tokenized system based on digits, based on totally non-physical, meaning no paper, no metal, just a digit on your phone or in an account or on a computer. And that gives them complete control, because it can see everything that you purchased, when you purchased it, how much you paid for it, what it is versus your bank account, and that type of thing. So it's really a control mechanism that gives the data gatherers more insights into your financial affairs. You don't have any financial anonymity in the new system whatsoever.
I thought they already have plans in place for a digital currency coming out of the Fed. Is that not
They
the
do.
case?
It was called Fed Now. It was a test run. It worked pretty darn well. But as far as it being legislatively adopted, where the central bank, the Federal Reserve, is in control of it, remains to be determined. Right now, it would take an act of Congress to allow the Fed to do the central bank digital currency. It's not out of the realm of probability, but I find it rather improbable. I think that it's more likely to be a private enterprise. You got to remember, the Federal Reserve is not really a government agency. It's quasi-government at this point in time. But when it was founded, there weren't really hardly any Americans involved in the Federal Reserve. It was mostly European bankers. And it was privately held, and still is for the most part, a private corporation. Although, as I said, there has been some quasi-government connections into the Fed over the last few decades.
As we shift, because if you listen to like Elon Musk, he's like, you don't need to worry about retirement anymore because everyone's going to have a robot and everything's going to be abundant, which I don't know how true that is. I don't know if we'll go to universal basic income. And even if you do, naturally the system will ration. If everyone's got $1 million, bread costs $1 million, right?
Right.
That's
right.
the reality of it. So
Yeah.
What does that look like?
Well, what it looks like is technocracy. Elon Musk's grandfather was the head of the technocracy group in Canada back in the 30s. When the Great Depression happened, there were all kinds of Me Too's shooting up saying, well, capitalism fails, let's have communism, or let's try socialism, or let's try a dictatorship, or why don't we do this or do that? Well, one of those that came out of that Me Too's was technocracy. And the idea was the politicians really aren't smart enough to run the economy. Scientists and engineers, they're more objective. They'll look at what the resource base is, and we'll base it on resources. We'll base it on energy. We're not going to base it on money. And that's basically the system that's actually coming about. Elon Musk is quite aware of the reality of the situation. And the UBI, Universal Basic Income, has been talked about in the past. And what it does is it really gives you subsistence living. Obviously, you don't have to work for it, but it divides up resources, quote unquote, equally. And there's less incentive. If you don't have the pride of going to work, doing something you love or something you want to do. And I know there's a lot of workers doing jobs they hate. I get it. I'm not exempt from knowing that. But the point is, when you have everything run by an algorithm, the artificial intelligence telling you how many calories you can have per day, how much you can travel, when you can have this apartment, if you have enough, you've been socially correct enough to upgrade to first class or not depending on the money, perhaps, more dependent upon where you sit in the hierarchy. So these are things that really concern me a great deal. But there's a friend of mine named Patrick Woods, who's the expert in the world on technocracy. You might look up his website. You might want to interview him. But a lot of people get confused that we're in, more of a communist system. There's similarities, but the real root of the problem, or the solution, the way they see it, the elites see it, is to equally divide resources among everybody That's not part of the power elite. Money may not even be needed. You might just be using these tokens, which, are they money? They might act like it, but we know what money is. Money's gold and silver, is something you own that's outside the system. So I digress. I'll give it back to you, Rocky.
So what is a person who's done well financially in the current system to do about all of this?
Make a side bet. Don't bet your life that I'm right. First of all, educate yourself and make a determination of how much of what I'm saying makes sense to you. And then all I have to do is it's like playing blackjack. I mean, it's not a good analogy, but it's making a side bet. It's called a hedge. We all know what a hedge is. A hedge is fire insurance you put on your house every year. You don't think your house is going to burn down. I never do, but you know what? I still buy it every year, just in case. And that's what buying physical metals and maybe the mining equities do for your portfolio. So if I'm correct and it happens in, let's say, your lifetime, then you have a position where when the system resets and prices, the collapse revalues everything. The value of hard assets will more than make up for maybe the loss you have in your stock portfolio, your real estate portfolio. Because if you look at what's happened time and time again, when gold really moves, it's up a 10 bagger or so. So gold during this bull market started at 250. And that was in the year 2000. Now we're in 2026. I think we all know that. But gold's been as high as 5,500, which is a 20 bagger. So if you had 10% of your assets in gold and silver, or gold and or silver, and it went up 20-fold and all of your other assets went to zero, you'd still have doubled your money in real terms. So you just need a small amount on the side, outside the system, that more or less guarantees your wealth preservation. Now, it won't prevent, people being discouraged with their stock portfolios going down or a contraction in the economy and seeing a lower standard of living for everyone, more or less everyone. But it wouldn't necessarily be you if you had the wherewithal to have real money when the reset occurs.
Do you need to actually own physical gold or silver, or there are ETFs in gold and silver? And I think you mentioned earlier the mining companies, which you can buy through the stock market. Are those all going to fare just as equally well, or are some of them more risky than the other?
Well, what I've taught, and to be consistent, is real metal first. But I'm very cognizant that there are people that don't want gold in their house or they don't know where to store it, although there's plenty of places you can store it if you want to. But so there are proxies that are almost as good, and that would be ETFs, would be mining companies. But owning real metal kind of is satisfying in a way. And again, it's not for everyone, but that's what most of us advocate in this space. But you don't have to. Problem having the SLV or the GLD, the gold and silver ETFs, is that it's dependent on the counterparty. I mean, if the stock market goes bye-bye for a couple of days because of a cyber attack, you're not going to be able to do anything with that asset. Whereas if you have physical gold or silver, particularly silver because of the unit price per coin, you might be able to go out and get gasoline at an independent gas, station owner, which I know there's not many these days. But you'd have the ability to barter if you had to. And I'm not saying we're going to a barter economy or the whole thing's going to collapse. What I am saying is that the least risk way to own gold and silver is to own gold and silver. If you can't, you can't. And then the next best thing would be mining shares and or ETFs.
This episode of Richer Soul is sponsored by the Profit Answer Man podcast. If you're a business owner who wants to scale and grow, increase profits, or want to have strategic conversations around your financials, then check out the podcast. You'll learn how to work less, increase cash flow, increase profits, and build reserves to help you weather storms. It's built on the Profit First methodology of pay yourself first. The Profit Answer Man podcast is a must-listen to for every small business owner and anyone who wants to help them survive and thrive. Check it out on your favorite listening platform.
In the past, we've talked about real estate as a store of wealth and a way to do that. And you've even mentioned it yourself. However, during COVID, my thoughts around it changed. And the reason my thoughts around it changed were if you have an economic collapse of some sort and people can't pay their rent, that becomes a problem. Now it's no longer a cash flowing property. If it's not cash flowing, or if the government instills controls like you can't evict somebody, you can't raise rents, they essentially undercut the property's value or its ability to do anything, which makes real estate a problem. And, in '08, other reasons, but real estate did collapse. Even over the last couple of years, if you've watched commercial real estate in the cities, like different properties have been through significant corrections. And so I'm unsure now as to how it fits.
Well, we think a lot alike. I would just parrot back everything you said, and I'd add one more. And the last one is you might own, let's say, a small apartment set up, maybe, an 8-plex or something, or 12, whatever. Or, a couple duplexes or 3 or 4 family homes, whatever the real estate is. But even if you put it in an LLC or a trust or whatever, they know who the final person is. And you're going to be considered rich. You own real estate. Yeah, but you haven't been paid for 5 months because of the illness. Well, so what? You're still rich. Well, maybe you can't make the mortgage payment. Well, so what? So what? You own real estate, you're rich. So that worries me as well. So in other words, having real property, I'm not against it, but every concern that you mentioned, I just would revivify. Those things exist. That's why I've never been a big real estate person. I've had a condo, I sold it. I have a cabin and a house. That's it. Is there, a great bargain to be had? Yeah, maybe. I'm not looking like I would never buy real estate. At the right price and a cash flow positively, I might. But what I teach my people, rather than rent a house, rent your stock. Thing about renting a house is what you just said. You could have the bathroom back up. You could have, vandalism. You could have a fire. You could have people that don't pay the rent. You could have people that move out and destroy it. There's a lot of negatives to real estate. But when you write covered calls, which I call renting your stock, you could have one of the premier gold stocks in the world. You own it, and you're earning about 17% a year on it by renting it out. And what does that mean? It means you write a call because you own the property, the stock, Newmont Mining, for example. So you sell 10 calls on Newmont Mining at $10 and $10 per 100 shares. So you make $1,000 that month. And then the stock value goes more or less sideways. You collect the premium, and you can do that month after month after month. If you get called out, you have Newmont at $100. You write a call at 110, and you get $10 for that. Now you're going to get 120 if you get called out. The stock clears at 125, you get called out. Well, what do? Well, you do what you do in the real estate rental business. You have to have your business intact, so you buy back that 125. So you only made $20 instead of 25. Whoop-de-doo. You lost, less than 5%. You can make at least 17 to 20% a year when you're in that business. So I've talked to other real estate people about this and kind of scratch their heads, but it's a very simple process. Most of the professionals on Wall Street do it all the time. Most general retail investors don't know how easy it is or how lucrative it is. And that's where you can earn money on your quote unquote gold holdings. And it's a great way to go. And I do it for my subscribers. I don't do it as often as I probably should, but especially in a sideways market like we're doing right now, you didn't just collect those premiums like cutting a coupon off a bond. It's a guaranteed amount of money. It's not guaranteed that you might misprice it and get less money than you could have. But in almost all instances, the probability is very favorable. The stock call writer, the one selling or renting their stock, wins 85% of the time. That's a lot better than counting cards at the casino.
It is. My only fear with that is when things go up dramatically quickly, you lose out. And you have to be ready to move and move quickly. And be aware of what's going on around you. As long as markets are relatively calm, you know your entry points and your exit points. You're correct. I remember when gold was taking off, and you would have been called out quite a bit on that one.
Absolutely. No, I agree with you. And, I don't want to go into, the strategies, but there are like bull spreads, and there's a way to mitigate that. But you're right. If you would have been an option buyer during this last run of gold, you'd be winning a lot more than the guy writing the calls in that time frame. You're right.
How long does this timeline reset take? How long do you think it'll be before things collapse? Is it imminent? Is it decades? Where are we at?
Well, I've not been great at calling this. I mean, I learned from, my betters when I was a young man, and then, as we said off interview, I went back to school to get my finance degree. And really reading those guys in the late 70s and early 80s, I thought, geez, by mid 90s, we'd have a real problem. And one of my many books, I have a library much bigger than this one behind me downstairs in the basement. One of my favorite books at the time was Bankruptcy, 1999. That's 27 years ago. But the argument was very clear that we could not pay back the debt under current conditions, and that at some point, we would have to revalue things. And yet here we are. So, but to answer your question, and looking at the markets giving us more information, because they are a feedback mechanism, I don't think we have much more than 2 years. The amount of depreciation in the US dollar is significant. But what's more significant is the reserve currency, which is the dollar, US dollar, place in the world. 20 years ago, 78% of all transactions were US dollar based. Now they're 58%. Why is that? Because basically the East, and you might include some of Europe, are kind of tired of the US dollar dominance, and they want a more equitable and more fair system. And the way they've mitigated that is they've decided to buy goods and services from each other in their own currencies. So rather than using a dollar to buy oil or to buy wheat or to buy soybeans, they're using renminbi versus the real, or the real versus the peso, or the peso versus the Zim dollar, or the Canadian dollar versus the euro. So all these transactions are going on currency to currency, circumventing the US dollar. So that is a big signal right there. The other one is how much appetite there is in the international markets to buy debt of the United States. And the appetite has gone down substantially. Very few really want to buy any more US debt, and the whole system depends on it being bought. So the buyer of last resort is the Federal Reserve itself. It's sort of like a snake eating its own tail. And so they could keep buying the debt, but when they do that, it increases the money supply. Because when they buy a bond, they have to monetize it, which simply means they pay cash, so you get an infiltration of cash into the system. So that cash is there, it's available, but really it goes into the bank's reserves, and the bank just takes that cash and sends it back to the Fed and earns interest on it. So we're in a system now that's broken. It's been broken for a long time. And we're seeing enough feedback from my perspective, trying to be objective, that I don't think we have much more than 2 years.
I'm amazed at how long I can be wrong waiting for what's right.
I agree. I have to agree.
It does amaze me. I heard a podcast from Luke Groman. Mm-hmm. It's been a while. And what he talked about was the possibility of going back to the gold standard. And I'm not sure exactly how it would work, but it seems that currencies would value themselves against gold, but it would float. So today, the dollar buys an ounce of gold. Tomorrow, $2 will be needed to buy an ounce of gold. But at least there's a little bit more something involved in that helps instead of going directly against the dollar.
Well, gold standard, as I said earlier, better a bimetallic standard, but if we go a gold standard, the idea is we have a measuring stick that's constant. So we know how much gold we need to buy so much wheat. Now, the next year, the wheat market might be much higher in the amount produced, and therefore it takes less gold to buy it. But if you did settle everything across the board in gold, you would have that constant. It doesn't mean the prices wouldn't change. They would. Just like there's an overabundance of homes built in your area. The builder miscalculated how many people will be moving there. And there's a great deal of overbuild. Well, the prices are going to come down. That's just basic economics. So there's nothing really magic about gold as far as keeping prices stable. It does help keep prices stable, but they still vary. The thing that doesn't happen in theory is that the government has controlled the printing press and could just dilute the amount of gold. If you go on a true gold standard, you do expand the money supply. The money supply is gold and gold only, let's say. But the gold miners produce about 1.5% more gold every year. So you're increasing the money supply as goods and service increase as well. So is it a perfect system? No. But it's been about the best system we've ever had. When you go back and study monetary history, a loaf of bread stayed the same price for 100 years. Think about that today. I don't know what bread was when I was in college. I don't remember. But I know it wasn't, what it is now. It was a lot less. I know what gasoline, when I started driving, gasoline was 25 cents the gallon. And right now it's $5 a gallon. So again, going back to that gold thing, I said if you bought gold 25 years ago, it was $2.50 the ounce. It's been as high as over 5,000 the ounce. Today it's about 4,600. So that gold piece would buy you more gasoline today than it would have bought you 25 years ago.
So what do people do beyond money to kind of prepare for a shifting economic system?
Well, chance favors the prepared mind. One of my favorite quotes. And all that means is be prepared. And that means just get a handle on this. I mean, Luke Groman's probably one of the best intellects in our space. And I think he explains things very clearly, but it's my genre. So there might be a vocabulary there that I take for granted that other people might not understand. I don't know. But there's several of us in this domain that have been primarily educators. Myself, Mike Maloney, Andy Scheckman. I mean, there's a lot of us out there. But get a grasp for yourself. Don't take anyone's word for anything. Look up some monetary history. Look at inflation of France. Look at the Weimar Republic. Look at these great inflations and what took place and what the social conditions were like. And once you've determined for yourself that it makes sense, then you can be prepared. You say, well, wait a minute. It makes sense that we go through cycles. And one of the best ways to do it, and I'll call it the lazy man or lazy woman's way to do it, is to watch a documentary. There's one on my website, themorganreport.com. It's step 2. There's a 3-step process. And there's 2 documentaries. One's called Four Horsemen Film, and it's about the end of the age of empire, which is what you asked me, Rocky, a little bit ago. When does this end? And I said probably 2 years or less. In that documentary, the Four Horsemen film, it talks about the end of the age of empire. But more importantly, it talks about the cycles. And this goes on through human nature again and again and again. In other words, we've been there, done that in other generations. So nothing new under the sun. It's not the end of the world. It's not everything collapses to the ground. It's a reset. And we go on from there. And so the cycle starts all over again. So I highly encourage people to watch that film. And it's about, an hour and a half long, not even quite that long. And I'll give you a good understanding of how the banking system actually works. The telltale signs that we're nearing the end. If you go back to the Roman Empire and how that empire dissolved, you saw an overemphasis on food. And today you see, the Iron Chef and Bobby Flay, and, there's all kinds of cooking shows. I mean, there's tons of them. You saw an overemphasis on degrading the family unit, be free, all that type of stuff. So there's a lot of parallels that happen and resurface again and again because these cycles do repeat. And right now we're in the system that's at the final age of decadence, oversupply of things. We've had an oversupply of foodstuffs. I mean, when I was a kid, we had two kinds of pickles, or maybe three. You had sweet pickles, dill pickles, and maybe bread and butter pickles. Now you go into the pickle aisle and you've got hamburger cut dill pickles with a twist of lime. I mean, it's got to be almost obscene how many products you've got out there. But that stuff starts to go away and contract as the degradation of the currency starts to evaporate. In other words, as people can't afford things and it's harder and harder to put food on the table, all those, let's say, at the margin items like certain kind of pickle brand or certain type of exotic, what have you. Now, the very wealthy, of course, will be able to indulge all the way through. But as the middle class gets wiped out, more and more of us will just be going for the basics more and more because that's all the purchasing power that we have left.
I know Ray Dalio's also done a lot of work in talking about cycles and the changes and the history as well. Do you agree with him, or there's some things that you are saying he's got off?
No, for the most part. I mean, most of what I've read and listened to from Dalio, we're pretty much in agreement. I mean, the one thing, again, that I think I need to emphasize is that it's not as bad as it sounds. And we haven't gone through it yet. So how do I know that? Well, I know some of it from history. I also know more from a spiritual perspective. I mean, we're looking at your program and what you bring to the fore, the richer soul. I think we'll have a richer soul by the time this ends because I think we've got our value system a bit distorted, where we're taught and teaching our kids that to be successful, it's all outside of yourself. It's, how much money you have, what neighborhood you live in, what kind of clothes you wear, what kind of watch collection you have, what your cars look like. And those are all really nice to have things, but they might show success, but success is an inside job. And I think we've overvalued the external and not valued enough the internal. So when times get hard, you start to look more at what's truly valuable and not so much what it costs, which means, for example, you realize how valuable your friends are. You realize how valuable your family is. You realize how valuable perhaps that Christmas dinner is that you can't eat like that, 2 or 3 times a month like you could in the past. Things like that. So really, the hardship brings about a revaluing not only of what the cost of things are, but what the price is for the human experience as far as what really is valuable. I mean, I know I was so distorted as a kid, a young man, the best things in life are free. I kind of laughed at that statement. Today, I take it to heart and I'm have conviction is correct. A beautiful sunset, a walk on the beach, someone you love, all those things. But we're taught outside the system. That's what really matters. No, what really matters is our human experience, connecting with each other, helping each other, being of service to each other, not slaves to each other, being of service to each other, and actually having a human experience that has much more priceless thing than what we can price. I mean, a real friendship is priceless. A great family is priceless. A good mate is priceless. And those are things that will come to the fore more and more as the currency destroys itself, because people will realize what's more important, keeping my family well fed or buying a new car. So those things are kind of a natural process. And it's probably better illustrated in that movie I keep referencing, the Four Horsemen film that you can get for free on my website, because it goes through that kind of generational situation where we go from soft men cause hard times. And that's kind of where we're at now. We were in a very overbought situation for the lifestyle of most Americans, living beyond their means and not even realizing that they were, because, there's so much credit in the system and you can buy today and pay tomorrow and those type of things. And then as things ratchet down the other direction, which most people don't expect, then, my house is worth less than it was 10 years ago. How can that be? Houses always go up and that type of thing. So that's my spiel on the more important part of the equation, and that is where your soul gets involved and you're in a situation where we see things for what they are and realize that we've probably overemphasized the materialistic view of success rather than the heartfelt connection we have with others.
And I agree with you. As we've gone through this shift during COVID coming out, the one thing we looked at is which way does the economy collapse? There are two ways. One is, you've kind of mentioned it, hyperinflation. The other is depression. And the funny thing is, hyperinflation gets people fighting. Depression actually brings people together, humankind. So hopefully, I mean, if you've got to pick between the two, I think depression is the better way to go as far as human nature, but we don't get to pick. It's a matter of what actually comes about and how people change and react to it. But there is that other convergence that you talk about, and we've mentioned it before. A lot of this is talked about in The Fourth Turning. It's talked about in other books. I see it. I knew about this societally because we saw it within our family. Like when a particular family got too much money and how they treated their kids, then their kids got soft and the money went away. And so it happens everywhere. The cycles are there. You have to be aware of them and learn to ride them better, I guess.
Yeah. Yeah, I think so. I mean, there's a lot to what you said, and, I'm in agreement as well. I will say this. What's more morally acceptable or more morally correct is a depression. Because if you're rich and you got a lot of cash and you make a loan, you're still taking the risk. So just because you make a loan isn't guaranteed you're going to get your principal and interest back. That's a risk you take. But in our society now, if the bankers make a loan that's invalid and can't be paid back, well, the central bank comes to the rescue and makes the loan good. That's not real capitalism. The right to succeed is capitalism. It also means the right to fail. So if you start a business and put up your life savings and get your friends to put in more money and you start that business and you're working away and you're making, as we learn in business school, the word widget. Widget just means a product of some kind or a service of some kind. And you're pumping out these widgets and the market says, we don't want those widgets, and you fail. Sorry, that's real capitalism. And we've exempted the superior class, the moneyed elite, the banking class. They're exempt from that reality. And that's really distorted the system. So coming back and letting the system naturally fall away for loans that are bad to go bad, for people maybe to lose on both sides. The person that borrowed the money can't pay it back. The person that loaned the money also loses. Sorry, folks, that's the real world as it's supposed to be, or at least under capitalism. And things settle down that way. And in a true depression, Rocky, as you well know, it actually contracts the money supply. And now you have a basis of, well, how much real cash is there and where can we rebuild from? A real depression, actually, from history, although painful, does not last all that long, if and only if the free market is left to come to its own devices and people make lemonade out of the lemons that they find, and you can regrow the economy. If you get a lot of government implemented good deed type and well-meaning programs to assist, and I'm not against assistance, this is a tight one, kind of a tightrope to walk, but nonetheless, the more freedom there is for people to determine for themselves how to regenerate their potential for the new economy, the better it becomes and the quicker it evolves.
And that's this cycle of nature. You have spring and summer and fall and winter. And we have not had winter. And it's part of the problem. You have to have winter so you can have spring. Otherwise, things don't survive and thrive. It's just natural order. And I guess we're ready for that at some point. Be ready, be prepared, and take the steps so that when it occurs, you're ready for winter and you're ready for spring.
I agree with you. I'm going to push back a little bit, and I think you'll see my sixth sense of humor. We have had winter. We've had some really big storms, but then the powers that be come in and throw the artificial sun up there and say, oh, no, we're not having winter. We got a new sun up there. Everything's good. and this will keep going on. They have postponed the inevitable, in my view. And they haven't let winter run its course, the way as I would say it. And I'm not saying you're wrong, Rocky. You know, I'm having a little bit of fun here. But we really should just get on with it. Let nature take its course and move through it. Because as you said, once we get through winter, we've got spring, we've got summer. You know, we've got those coming to us. We just got to be men and women enough or adults enough to just say, okay, it's hard times ahead. Doesn't mean the end of the world. Maybe it brings our families closer together. Maybe it brings our friendships closer together. Maybe it launches a different way of thinking about money and how we do the social contracts. There's a lot of good that can come out of this, but delaying it and pretending and extending and pretending and extending is only going to make it worse when it hits.
I agree with you. I think the analogy was the party got a little slow, so they started handing out beer and things were great. And then it got slow again. So then they started doing shots and then it got slow again. And then they started smoking marijuana. And I think we're up to crack cocaine right now. And at some point, it's over. Your party's got to stop. And I think we're at that point. Again, when, I don't know. But at some point, it's like musical chairs. The music stops and hopefully you've got a seat to sit down on.
It's time to learn the secrets of life.
What's one truth about success you wish more people understood?
I think the one thing about success that I wish everyone understood would be to my own self be true. I'm a big self-development type, where I'm always trying to be a little bit better. And some of the self-improvement books and courses I've taken, Nightingale Conant wrote or had a cassette tape series. That's how old I am. But one of the tapes that I'll never forget was on success. And it talked about a guy that's a janitor in a high school and how successful he felt. And after listening to that tape a couple of times, I realized that's something that you have to have of your own self, that you can determine success for yourself. But it goes back to what I said earlier. We're taught to look outside of yourself. And if you don't have the new car every 2 years, you're not successful. And we get that in our heads. But that isn't the truth. The truth is what makes you successful. Going to that janitor job, interface with those high school kids and be able to talk to them every day and change their lives around was a success for that gentleman. So that's part of success I would like everyone to understand is don't listen to the noise outside of yourself, what it means to be a success. I just came back from a funeral to do this interview. And it was one of my neighbors here, a great guy. Everybody misses him already. But as we all know, you can't take anything with you. All you have at the end are the memories and what you provided to others and how you treated others. So I think that's really important to reinstill. That's kind of what I've tried to do in my documentary we could talk about in a minute.
And that's very, very true. I remember the stuff from Nightingale Conant. It was a long time ago. What's a lesson that cost you a lot but was worth every penny?
Oh, boy, that was a tough one. Well, for me, looking back at the biggest financial mistakes I've made, it's been on trust. And I have to look at my part in it. And so one of the worst ones was to not do my own due diligence on the investment. I trusted the people that were promoting it rather than look at their track record, look at, who was involved. And so that was on me, just because someone gives you a phone call and says this is a great opportunity doesn't mean it is. So you have to look at your part in it. So I think the greatest lesson is if you do your due diligence thoroughly and you fail, then you really can't beat yourself up. If you go into it on a basis of, well, we did a deal before, so-and-so says they're good guys, then you got to look at your part in it. So sort of like NFL football, I'm a football fan that, if my team loses, I'm not happy. But if they played their butts off and I know they got beat because they got beat, the other team was better, I could accept that any day of the week. But if they get in there and the team's beating up on them and then the second half they go out there and kind of ho-hum it, that I don't accept. So that's it. to actually be a little better on my due diligence. Of course, it's to write a financial newsletter. When it's come to the investments that I suggest in there, I've always done really good due diligence. Has it exempted me from making mistakes? I have, but at least I've got the goods on these companies. But on my personal situation, haven't done it in years, but the last one stung pretty good. And so I didn't take the time I needed to really thoroughly look into the investment.
And I am surprised how few people put the time into actually reading the paperwork or looking at the stuff. It seems to be a rarity of a skill these days. If you were to give an 18-year-old one specific piece of wisdom, what would it be?
Comes back to the first one, to thine own self be true. I think the Oracle of Delphi had it right. Doesn't mean to be selfish. It just means to understand yourself and have your own moral compass. Just because it's really cool to smoke pot or all the kids are doing it doesn't necessarily mean that you have to. If you don't want to or don't feel comfortable, be true to yourself. Walk out. Tell them maybe later, it's not for me. But, we get this peer pressure, especially as teenagers and all that. But I didn't really get in gear until later in life. I was always intellectually above average, but emotionally below average. But I think I've caught up now. But in my late 30s is when I really started looking at, why do I care what they think? If I know I've played my best game and I know I've lost, at least I know I played my best game. It's not for lack of effort or lack of, everything I have available to. It's just it didn't work out. That widget idea didn't work. So what? I'm doing another widget and I'm going forward. And with that kind of an attitude that you're true to yourself, because I want to succeed. And my idea of success was to have a business where I was my own boss. I didn't care how many hours I had to work. I just wanted to be free enough to do what I love to do and make a living at it. And I succeeded at that. And that's as far as it went for me. I mean, there's guys in my industry that do things differently than I do that are, let's say, have a higher net worth, and good for them. But that was never my goal. My goal was to serve myself by picking out great stock investments in the resource sector and sharing that knowledge with my paid subscribers so we both win. And that's what I've done for over 25 years.
Congratulations. If people would like to learn more about you, the movie and the other stuff, how do they find you?
Very simple. Just go to the main website, themorganreport.com. And there's 3 big buttons up there. You get on the free list, watch the 2 movies for free. And if you want to get involved behind the paywall, you can hit the 3rd box and we'll give you the details on how to become a member.
Awesome. Thank you so much for joining us today.
Rocky, a real pleasure of mine. Thank you.
I'm always worried about freedom and how fragile it is, and how as I get older, how I can make it and ensure it. Inflation makes money worthless, and you lose purchasing power while thinking you have more. That's why $1 million today isn't that big a deal. David makes the case that real wealth is not just what sits in the account. It's what you can't be taken from you quietly by debt, debasement, distraction, or dependence. And also, here's the deeper invitation. What is your success? What is the life you want? And how do you do that in a world that's changing faster than it ever is? And by the way, if you know someone who's winning on paper, but they're asking these bigger questions, send them the episode. I'd appreciate it. And let's connect on LinkedIn. Continue the conversation. Thanks for listening. Have an abundant week.